and it's not fun to feel like you're losing money. That's kind of a bummer. But that's what happens when you're an investor, right? When you're an investor, there is that chance that bad things can happen. Did Greg just say I'm the champion of finance? Boy, you better stop. You better stop up here just making stuff up. Just saying stuff. That's Greg does that. He just says things. Anyway, I'm kidding. Thank you, Greg. That's a very nice thing to say. But I'm not here to be nobody's champion. I'm just here to do my best. All of us are champions. I think all of us are winners. Every one of us. I think the Black community is full of champions, right? So let's bring out the champion in all of us. All right. So with that said, first thing I want to do is, as we get started, is I want to read the first B1 story. And this person asked me to keep her name anonymous, but she submitted this story and she says, I'm so blessed to be excelling in business ventures and now more informed of the many facets of investments, investing, etc., because of the Black Business School. I had been an investor prior to Dr. Boyce Watkins, but with his lectures and classes, I have become a stronger, more informed investor. Truly, the Black Business School has offered me just as much or more than undergrad and graduate studies. To be a part of the Black Business School is a blessing to many families for now and the future. And one thing that I take pride in, and I thank you for sharing your story. And I'll text you guys the link if anybody else wants to share their story. That really helps us in terms of knowing what's working and what's not working. Our goal, my goal at least for sure, was not just to do this so I can be seen. My goal was to do this so that we can all grow and benefit and adjust and change and solve a problem. And the big problem that we're solving is this idea that you have this group of 40 million hardworking, very capable, very intelligent people who, for whatever reason, are not able to build wealth. They collectively, as a unit, our economics have not gone up. It's kind of weird to me. You know, you sacrifice the most. You've literally been killed for capitalism, right? They literally, and I'm not just talking about the lynchings and all that. I'm talking about people dying from the diabetes and the strokes and the heart attacks and everything else that comes from all the stress you go through at work every day, and all the fried chicken you eat in between going to work, which is feeding the capitalist beast. Because Popeye's chicken has made billions of dollars, off of Black people in particular. To me, it seems to me that if you're making the highest sacrifice, you should get the highest reward. And when you're making the highest sacrifice and you don't get the highest reward, then that's a mystery. That becomes a puzzle that must be resolved. That becomes like a Scooby-Doo mystery. Like, okay, let's figure this out. Like, let's work backward and figure out what's going on here. If you're giving the most and you're getting the least, then there's something wrong with the system. There's something systematically wrong. And I'm not just talking about the white man's system or somebody else's system. I'm talking about your system. What are you systematically doing that is keeping you from getting the rewards that you deserve? Right? Remember, it's not just his system that's a problem. You operate and you commit yourself to a system, a way of doing things, a culture, a process, a set of habits that put you in a place other than where you want to be. And so really don't so I'm not here just to talk about what they're doing wrong or how they're taking your money. I mean, I don't know about y'all, but if somebody's giving you money for free, if they're giving you something, then who are you to be wrong to take it, right? So the reality is that it's very easy to say they're exploiting us. Look at what they're doing to us. Look at what they're taking away from us. We've had that conversation. I think the better conversation is to say, what are we giving them, and why do we continue to give it, despite the fact that we don't have to do that, right? Like nobody made you eat the fried chicken. Nobody makes you get up and go to work for a white man every day and to train your children to do the same. Nobody forces you to raise your children to believe that they must be educated by white people and that they have to go in $200,000 in debt to get a college degree. Nobody forces you to do these things, but there's something sometimes internally that makes us believe this is the only path, right? There's something that makes us believe like, okay, this is the only solution. And the truth of the matter is that all the data shows pretty much these solutions just don't work. Right. And so, and again, as a college professor, I'm a big believer in the college education, but there's something kind of broken when everybody's coming out with all this debt and nobody's really feeling like empowered. They're not walking away saying, gosh, I feel really good about this trade-off that I made. Instead, a lot of people say, gosh, I feel kind of screwed. I feel like I got a raw deal. And that's the opposite of what we want to aim for in the Black Business School. I don't want anybody walking away from the Black Business School saying, man, they tricked it to me, man. They fooled me. Dr. Boyce came in here with his smooth talking ass, and he came in here and tricked me into doing something I didn't want to do, and I'm mad. No, no, I want you to walk away saying, gosh, I'm so happy I did this. Like this really changed my life. My life is so much better now. This is why we do this is why we do the surveys and get the data. Is because I want you to feel like a problem has been solved in your life and that your life is actually better because we're here. So when I text out the link and I say, hey, share your story, I want to hear those stories of results. I want to hear you tell me, okay, I'm doing something different. I'm educating my kids on finances, or I opened up a bank account to invest for my children, or I'm going to have a baby with my wife in 2 years, and we've already started to invest on behalf of the family so that when the baby gets to be 25, the baby will have $500,000 in the bank, so she'll never have to work for anybody. And it's little tips like that that make the biggest difference, right? I don't really sit around talking about things like equality. You guys know that stuff like words like that kind of make me vomit a little bit because I'm not. There's no gold standard about. There's nothing like white people don't have magical fairy dust coming out of their asses that make them some sort of beacon and standard of economic excellence. I'm sorry, no disrespect to them, but that's true. They just don't, right? If you look at the data, remember I taught a lot of white people, Asian people, Jewish people, everybody else. You look at the data, most Americans are just not that good with money. Most Americans, not just black people, most Americans overspend, most Americans undersave, most Americans don't understand the opportunities outside of the corporate plantation. And this is because you're sort of part of this big, gigantic house of cards that called capitalism that's really structured that way. And so don't ever think that other communities have some magical formula that we have to adapt. I personally think that we can be the originators of the magical formula that other people can copy. Just like they copy us when it comes to playing basketball, they copy us when it comes to music, they copy us, in a lot of other areas. I think that they should be copying us when it comes to finances. Because the last time I checked, I don't see anybody. Tell me, give me a yes or no. I have not heard anybody ever talk about investing on behalf of your unborn children. I've not. I've not heard Dave Ramsey say this. I like Dave Ramsey. I never heard him say it. I never heard Grant Cardone. I never heard, whoever, Susie Orman. I never heard them say, if you're gonna have a baby in 5 years, start investing for the baby when the baby's -5 years old, because compound interest builds. The more time you have, the more compound interest can really kick in. In my view, and again, not to be political, but I think birth. When I think about when they say, well, does life begin at conception, right? I know that's a political conversation. I'm not going to have that. But I think conception begins at ideation. Like, I think that your child is born the minute you decide, I'm going to have a child, right? Like, the minute that the baby is a thought, the baby is born. The baby's real. There's an asset there. There's a human that's going to grow into something, right? So in my view, if when I was talking to LeVar Scott, the race car driver, who, by the way, follow him. Please follow him. I'm so proud of this young guy. I love the young guys we kind of get a chance to mentor. I talked to D1 yesterday. D1, the rapper, he's changing the world. He every other day he's doing something amazing. He was performing at a Clippers game, and he was on this show called Drake Champs, and he's getting all the rappers to reconsider whether or not it actually makes sense to rap about murdering your own people and disrespecting your women and throwing all your money away and passing around STDs, and he's getting them to rethink that. And I said, that's good. That's the goal. I'm glad they're realizing that self-destruction is not a good business model for the black community. It's a good business model for people that own record labels. It's not a good business model for us. But anyway, when I talked to LeVar, we talked about investing. I said, well, I said you're 22 and you're young and you're rich and you're a successful race car driver, and I see you on Instagram, and you got all these thirst pics. Now you're a model and all these images of you with your shirt off and everything. I said I can only imagine what your DMs look like. And he said, yeah, the girls are noticing. And I said, yeah, well, first thing, number one, stay humble. And I said, number two, one day you're going to have opportunities to procreate and have kids, right? I said, you plan to have kids, right? He said, yeah. I said, okay, well, so if you have kids in 10 years, and that means you have 30 years before your daughter is 20 years old. You have 35 years before she's 25. And so you got 35 years to build a house of wealth that is so impenetrable, so powerful, so overwhelming, so extraordinary that she will never, ever, 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 ever have to suffer at all in her life. I said the outcomes of the child are heavily dependent on the decisions of the father. And the fact that you are a race car driver, for God's sake, that means you are out here doing something most people are afraid to do. I'd be scared to drive a car 250 miles an hour around a track. And he wins. He wins races. Like I'm like, whoa, this is crazy. Yeah, so he doesn't just do it. He's the fastest one. I said, so you're smart, you're capable, you have all these abilities. And I said, so now I would need you, so that tells me you're a lion and lions got to lead. And I need you to go out and be a lion for those kids because they're going to benefit, they're going to be affected by the choices you choose to make when you're young. And actually, when I talk to him again, I would probably tell him to go watch the Eddie Murphy documentary because Eddie Murphy is a great example of a guy who seems to have experienced the highest heights of fame and wealth and power, but he didn't allow it to destroy him. Like all the other famous comedians and actors that have died from drug overdoses or just gotten in trouble when it came to women or ended up going bankrupt or taking their own lives or whatever. So ultimately, I think that there's like a model there. There's something there in terms of wisdom and wealth and all that stuff. So anyway, with that being said, let me go to the next topic I wanted to kind of hit on. And let me know, you guys can hear me okay? Just give me a quick yes if you can hear me. I always get self-conscious about the Wi-Fi whenever I'm traveling and stuff. Okay. So make sure it's good. Okay, great. Also, Chanel's in the chat and she's sharing the link if you want to join us for Coin, the stock options certification training that we do. It takes 6 weeks to do. And we start on January 8th. So if you want to join Coin, the link should be in the chat, and it's a discounted link. So you feel free to take advantage of that discount. All right. So with that said, one of the things that has come up is the possibility that there's going to be a stock market crash. And whenever people ask me if there's going to be a crash, I say, of course there is. There's always a crash. Crashes always happen. Crashes have been happening since the stock market began. One of the first ever bubbles, the asset bubbles that ever happened was actually, I think in Holland or something. They had something what they called the tulip bubble, where for whatever reason, and this is the funny thing about investing is that almost anything can become a fad, anything can become a trend. So what happened with the tulip thing was suddenly these weirdos in Europe decided that tulips were really important and that tulips were worth investing insane amounts of money in. And so basically it reminds me of like NFTs, like you have these like you have some ugly picture of a monkey that's selling for $250,000. And so people were spending all this money on these tulips and the price of tulips would get to the point where you could buy a house with the amount of money that you might spend on a tulip. And so you sell your tulip and you could buy you a crib. But people would still not buy the house. They would actually buy more tulips. So it got to the point where I think somebody just came to their senses and said, why should a tulip be worth the same as a house? And next thing you know, there's like the market crashes and people lost almost everything. So that was one of the first bubbles on record. And one bubble that's also happening now is in the public stock markets. And so I'll give you some evidence that's out there in terms of metrics. They kind of make us think, the experts kind of feel like we're due for a good crash. All right, so here, and by the way, Melvin I see you have a question. And so Chanel can answer your question, Melvin. She can take good care of you. All right, so let's see. So here, one thing, there's something called the Shiller Cape ratio for the S&P 500. That's now around 39 to 40, which is well above the long-term average of 17. And this was it got high right before the dot-com crash. So this Shiller metric, which Robert Shiller is a really famous economist. I remember reading a lot of his research in grad school, and he's good at really predicting when the market could be overpriced. So the Shiller index is saying, hey, this thing's about to blow. Just be really careful. And the problem is you don't know when the crash is going to happen. But actually, even this morning, I made some moves in my own portfolio to prepare for the crash. The thing about a crash is that people that make a lot of money, like the billionaires, they don't really fear the crashes. They start licking their chops when they see a crash could possibly be coming. Because what they do is they prepare. They get ready to prepare. And what happens in a crash is I heard Ken Griffin, who was a billionaire that lived in Chicago for a long time, and he said that a crash is not a time where people lose money. He said in a crash, it's just a transfer of wealth from unprepared people to prepared people. And so he said that, as a filthy rich person, now King Griffin, if you want to understand how much money this man makes, imagine the wealthiest athlete you can think of, right? Think of it, the wealth. I want you to think about Steph Curry, 40 million a year, LeBron James, 40, 50 million a year. Think about the richest athlete you can think of, Dak Prescott, 40, 50 million a year. And then I want you to imagine someone who has enough money where he could pay the salary for 100 Dak Prescotts in a given year. Maybe 200, maybe 300. Right? He's got that kind of money, that kind of heavy dynastic wealth money. In a given year, he might make $1 billion a year. This guy, that's how wealthy King Griffin is. And so what Ken says is that in a crash, he said he loves crashes because that's a great opportunity for him to hop in and just buy a lot of stuff really cheap. He says so what he does is he'll keep a little grocery list, a little laundry list. Like this is the thing. There's in the world of finance, there's like the fish and then there's the sharks. And then there's other things in between. I'm not necessarily a fan of being a predator all the time. I'm not in any way condoning predatory finance. But the interesting thing is that there's a very thin line between what would be defined as predatory behavior versus what would be actually considered to be a rescue. Um, for example, when Barack Obama came into office and everything crashed and everything went to hell in the stock markets and all that, in the real estate market, the government came in and they rescued. They basically took $700 billion and they rescued the economy and rescued the banks and whatever. But really, what was really going on was they weren't just giving them a donation. They weren't just writing a check and saying, "Here, have fun." They were actually purchasing distressed assets. They were propping up the market by buying things that had dropped in value that other people didn't want at that time. And really, a good analogy that I just because I just think about things in this way is it reminds me of when Suge Knight went and signed Tupac Shakur while he was in jail, and he got him to join Death Row Records. And what he was doing was he was basically acquiring a distressed asset. When Tupac was in jail, he wasn't getting the same number of phone calls or same number of offers, same number of opportunities. So Suge said, okay, I'm going to take advantage of this and reach out and see if I can support him and sign him while no one else wants to sign him. Because if he's out and he's free and he's the hottest thing in the world, then everybody's going to want to sign him. But if I go talk to him while he's in jail and nobody's really returning his calls, that's my opportunity. So he was acquiring a distressed asset. He wasn't necessarily doing something predatory. If you want to define it that way, you could. But Tupac never felt it was predatory. Tupac said, "I appreciate the fact that Suge Knight was there for me when nobody else was." So that's the interesting thing. So someone who acquires that distressed asset, remember, people can't buy something from you if you're not selling it. You can't buy something that's not being sold 9 times out of 10. I mean, there's rare exceptions, but for the most part, usually if there's a stock that was priced at $80 a share and the price drops to 50, and someone wants to buy it at 50, it's not like they can walk up and beat you up and make you sell it for 50. What happens is life might have beat you up. Right. A lack of preparation might have beat you up. So the reason someone might sell that stock for 50 is because either A, they are liquidity distressed. They need cash because everything's dropped and they got too much leverage, too much debt because they got too caught up. They were partying a little bit too hard. When the market was going up, they thought it could never go down. So they have so much debt now, they're getting margin calls and they have to sell the asset, or they are or they've collapsed into fear. They are now in the prison of fear, which leads them to have the inability to see the bigger picture. Fear causes you to think very small. That's why government officials work so hard to put you in fear. Whenever they want to take away your rights, they just scare the hell out of you. So 9/11 happens, everybody's scared. It's like, okay, yeah, we'll just sign this bill that gives us these rights to go and search your house whenever we want to and all that, right? Well, and so there are a few people who hold the line and say, no, this is a violation of civil liberties. But a lot of people, because they're scared, they're like, whatever you want, whatever you want, whatever you want, right? And that's why politicians have sayings where they say, never let a good crisis go to waste, because a good crisis they know creates the fear, which leads them to be able to step in and take advantage of what they want. But why? Well, because there's a difference, there's a differentiation. There's what I would call a consciousness arbitrage happening. Arbitrage is where you can exploit the differential in two different realities, basically. That's a deeper way of defining arbitrage, but that's what it is, right? So there's an arbitrage there, meaning a gap. There's a gap in consciousness where you're not you got the blinders on. You're thinking short term, you're thinking about this threat that's in front of you. They're thinking long term. You're playing checkers, they're playing chess. You see the trees, they're looking at the forest. So two people who are on different planes of negotiation are going to have different expectations, different desires, and the person that's on the higher plane is usually going to win. The person that can see long term and see big picture, 9 times out of 10 is going to have better outcomes than the person who only sees the small stuff, who can only see what's happening right now. That's why Dr. George Fraser always talks about how wealthy people plan for plan across generations. He said poor people plan for Saturday night. They're thinking about just getting through the week so I can go have a beer on a Saturday night, watch the game. A wealthy person typically in many cases is thinking, well, what's going to happen with my grandkids, or my children when I'm gone, or whatever, right? It's kind of this expansive type of thinking, and that's why this class is called financial consciousness, because you'd be amazed at how much of a differential your outcomes will be by simply practicing seeing the bigger picture. And that's actually one of my strengths. Actually, when I did I had a series of deep dive psychoanalyses to help me understand who I am and how I think. And they have this thing called 16 personalities. The website 16personalities.org. I found out that if you know anything about this, you might know what this means. I'm a strong INTJ. INTJ. So if you look up INTJ, that defines me in a nutshell. And basically, it says that I like structure and I like big picture thinking. I like visions. I like to live in a vision and think about the bigger picture, not get caught up in the minutia, right? So that's something that I'm actually decently good at, and that's something I think that you should consider in terms of how you can become a better investor. If you can see the big picture, then typically you're going to do quite well that way, right? So anyway, moving on. um, just a reminder, today at noon Eastern, we are going to do stock market training. So if you want to join us for that, just go to drboystockmarket.com. You can do a free trial at drboystockmarket.com, and more evidence of the coming crash. There is also an extreme market valuation to GDP ratio. They call this the Buffett indicator. And basically, it's about 220%, which it means that the market value, when they measure that relative to gross domestic product, when they market the value of the stock market, or sorry, when they calculate the value of the stock market relative to just the size and the strength of the economic engine that is America, they're finding that that ratio is quite massive. And so that could mean that the market's a little bit ahead of its skis. It's at 220%. The historical range is between 90% and 135%. That's kind of scary, because that would say that that ratio, in order for us to hit historical averages again, everything will have to chop in half. So don't think that your stocks can't just chop in half out of the blue, that they can't just decide, hey, yesterday I felt like being a $230 stock. Today I think I'm gonna be $109 stock. I don't know. I kind of want to just, if everybody's changing their gender, I'm gonna change my price. I'm just gonna pretend like I'm gonna identify as a $109 stock. And that can be really frustrating, right? Because it can give you the illusion to believe that you actually lost money. Well, really, you haven't lost money yet, but you do own an asset that is worth less than what it was worth before. It's just like, remember, just like a football game, right? Just because you're losing doesn't mean you've lost. There's a difference between losing the game and actually losing the game, if you know what I mean. Sometimes you can be behind, but that doesn't mean you've actually lost. Now, actually, let's take a quick trip to Instagram real quick. And I want to show you all something. I did something here that every now and then I told you I just think AI is so much fun. And by the way, AIEmpireSociety.com is where I learned a lot of stuff from Micah Smith. Micah Smith is one of the leading experts in this area right now. She's a super cool lady. So feel free to go to AIEmpireSociety.com. All right, so here's my Instagram. My Instagram is Dr. Boyce Finance. I'm gonna show you a few things that are just up there just to talk about it. One is I like little messages like this, because AI just gives us so many capabilities, and this is just something to remember. You can't pass your job to your children. That's important to understand, because if you look at how many people will sacrifice their children for their job, I kind of just feel like I don't know if that's a fair trade-off for you, right? Um, I don't know. Again, not telling anybody what to do, but I did see where they were mentioning in The Economist that there is what they call a relationship recession, where lots of couples, men and women, are choosing not to date each other and procreate and get married and all that. And I get it to some extent, just because, marriage and relationships can be work and it requires growth and you have to be patient and you have to what's the word, be a little selfless. I think you got to think about other people other than yourself, and we kind of live in a me society, which fine, whatever, it's up to you. And what they were saying was really interesting, was they were talking about some of the possible reasons. And one of the reasons they brought up is that a lot of people, they particularly focused on women, but I think it's true for a lot of people, that they were so much into their career and they would sort of judge a relationship based on whether it got in the way of their career. And it's all fun. Like, I found that it made sense to me to do that until I got about 42, 43. And I think that when mortality hits, I think that when I found out my blood pressure was high, and I was like, wait a minute, you mean I could actually die? Wait, hold on, right? Like then you're like, oh, wait a minute, maybe this job isn't the most important thing in the world. They say that when death is in your peripheral vision, you start to see everything different. You become more courageous. You become more committed to certain things. You're not afraid to have certain conversations or do certain things, right? It just changes your perspective about everything. And but so anyway, the other thing they were talking about that was really fascinating was um, that they said that they said, and this isn't just true for Black people, it's true for all ethnicities. They did not mention Black people one time in this article. They were talking about Korean people and white British people and all that. But they said that women, even though women have risen in terms of their income potential, which has reduced their necessity of having a man in their life, so they don't see men as the entity that they need in their life to have money anymore, right? Just like maybe there was a time where a man would get married because he wanted to sleep with a woman, but now everybody's throwing sex, like, people are selling sex for two 95 a pound right now, right? So it's kind of out there everywhere. Same thing is true when it comes to women and their need for money. They kind of know they don't need a man to get money. So then it requires you to form other reasons you might need a man and what kind of man you might choose. And so then they were also saying that the other thing that's interesting was that as women's income rose, they still wanted men that made more money than them, right? Like, so women, they didn't hit parity with men, and to some extent, in some societies they make more than men, and but they still want the man that's making the most money, right? Which it has this tiny pool of men that you want to mate with, and this big pile of women that are all chasing these same guys. And then on top of that, they said there's an enormous preference. They went on the dating apps and they said that lots and lots of women will put that restriction that says, I only want a man who's 6 feet tall. And I told you about that when I would go on the dating app and women would politely send. I got several messages like that. I'm sorry, but I don't date anybody under 6 feet tall. And she'd be like, I'd be like, with your little 5'3" ass, come on, like, But still, I didn't even know that was a thing. I didn't know that was a preference until 25 years ago when I was on a dating app. And I kept getting these messages. I'm like, what is it about being 6 feet tall that's so magical? But then I studied it, right? When I wrote Financial Lovemaking, I studied what women like and what men like, and I learned about the height preference, which is fine. That makes sense. So anyway, long story short, it just creates this like weird imbalance, where you got this massive number of women and they're pursuing the same men, and then of course all these men are dogs because they're all dating 14 women at the same time, and then you have this angry underclass of regular average dudes who are just angry. They're like, wait, I'm a UPS driver who's 5'9" and I'm a good guy and you don't want anything to do with me. You want this 6 foot tall guy that's got 14 girlfriends, but you have no interest in me. So it's like the biology is kind of a little bit out of whack, and I don't know how that ends. I don't know what that looks like. I think humans are still going to reproduce. Maybe this 1% of 2% of men are going to just have all the babies, and you have babies, mamas everywhere. That's what I see a lot actually in certain spaces, and actually that's true in the animal kingdom. If you study animals, particularly dimorphic species, they have dimorphic and some other morphic. I don't remember the other word. But anyway, they have the species where the males are much bigger than the females, and the females want the bigger males. And what happens is that 2 or 3% of the males, five or maybe 5% of the males produce like 90% of the kids, right? So I guess it's like a bunch of NBA players like having 55 babies mamas, and then you have guys that can't get a date. So I don't know how that's going to play out, but it's really fascinating to watch from an economic standpoint because dating really is just like a labor market, just like a stock market. It's all a market, supply and demand. That's what it becomes. So it's really interesting. I would, and the reason I think it would be good to understand that from a personal standpoint, understand how markets work, is because it allows you to make better life decisions. It allows you to kind of process things in a certain way to understand what you're up against, what you're dealing with. Like I think on these dating apps, it's easy to think that you have 20 options when really you don't have any options, or maybe you only have one because you have a lot of shallow possibilities, a lot of people that might sleep with you. But that's different from somebody who's willing to truly invest in you, invest their life in you. That's a heavy choice. When I pick my wife, the criteria I used to pick my wife was very different from criteria I might have used to pick a girlfriend, which is very different from the criteria I might have used to pick a girl that I wanted to hang out with for a little while. No disrespect, but not everybody, not every situation is equally yoked. And I think that if there's a imbalance in expectations, it can lead to disappointment, right? Like if I go work for a company and I'm thinking you're grooming me to be the CEO, but really you only want me to work in the mailroom, then it's important that I get as much information as possible, as quickly as possible to know like, okay, so what exactly is my career path here? Like, is that in alignment with where I want to be? And if it's not in alignment, then maybe I should go invest in another company, right? Okay, so anyway, let's go back here. So my Instagram is Dr. Boyce Finance, by the way, if you want to go check it out. Also, if you want to know what stocks I like the most, things like that, you can just type the word stock under any comment, under any post, and it'll send you a link in Instagram. So let's move on. Okay. So here's something else. Apparently there's an obscure method to wipe out student loans. I haven't tried it out, but based on my research, I saw several sources that said that this can work. And I put kind of a guideline if you want to try to get rid of those student loans. And what they were saying is that if you file a regular bankruptcy case, that's not going to get rid of your student loans. But then there's like this extra thing where you can do what they call an adversary proceeding, which is a lawsuit inside the bankruptcy to discharge the student loans, where you can actually sue the loan provider and you have to claim like hardship and stuff like that. So you got to show your assets, your income, et cetera. So it seems like it's really built for people that are um that are struggling, that really can't pay the loans. Like if you're rich and you just don't want the inconvenience, it may not work for you. But if you're, somebody that's like, this, I can't pay this, is too much. Apparently this process, again, I haven't tried it, but if you prove what they call undue hardship, they will forgive some of that debt apparently. And there's something called the Brunner test, and you have to go through the Brunner test. And if you pass the Brunner test, then I guess you can get rid of some of the debt. And so you can get the loans written off and eventually move forward debt free. So feel free to research that. I cannot verify this. I have not done this myself. I'm not an expert on this. I am not a lawyer. This is not legal advice, but it's something worth looking into because, as Joshan knows quite well, they're looking to garnish your wages if you owe student loans, and that's 100% true. The Trump administration's opened up garnishments as a way to make you pay your debt. Well, I told you debt is slavery anyway, and um, that's what they tend to um, that's what happens, right? The goal is like to get you to make a commitment and then force you to keep the commitment, right? It's almost like somebody that tricks you into getting married and then if you get a divorce from them, they take all your stuff, right? Like so so imagine a really deceptive man or woman, right? Who's like, I'm gonna fool you into getting married and then get you to make an agreement and then I'm gonna force you to fulfill the contract, right? Because easily I can violate the contract. But if you have the strength to enforce the contract, then that's a very different situation. Like I remember having a conversation when I used to go to California and hang out with Damon Dash, and I remember him talking about that. Dame is kind of a rough kind of fight. He likes to fight a lot, and and one thing he was talking about was that he said contracts don't mean anything. And I said, really, what do you mean? He said, because it doesn't matter if you sign something on a piece of paper if you can't enforce it. He said contracts have to be enforced. And I said, yeah, that's true. And that means that you have to sort of ask yourself when you make an agreement with someone, how are you going to make sure they're going to keep over their end of the bargain? And that's why marriage is kind of an interesting vehicle, because marriage means that's different from somebody saying I love you versus somebody having to tell the state that they love you and put it on a document. That those are two different scenarios. Somebody could say like, "Hey, we're just as good as married because I love you and I'm here and I care about you." But that's different from somebody willing to put it on a piece of paper where there's a real consequence for them not fulfilling the promise of the contract, right? So just keep that in mind, whatever it is you choose to do. All right. So one question I was thinking about, give me again, what do y'all think about this? I decided to ask this question. What would you rather do? Would you rather be debt free and have bad credit, or have $70,000 in debt but have perfect credit? And I picked 70,000. That's an arbitrary number. Maybe I could should have picked 170 or 270, but I picked 70. I don't know. It's just a number that came to mind. And I'd be curious, what do y'all think? Would you rather have bad credit and no debt, or have perfect credit and a lot of debt? Let's just say a lot. I don't know. A lot might be different. Jeremy says he'd rather be debt free. Dewan says bad. Lady Emma says debt free. Interesting. Okay, yeah. Okay, so y'all are similar to me. And someone says, what type of debt? That's a great question. That's an excellent question. Yeah, I think it would depend on what type of debt, for sure. And I probably should have qualified that. I should have said 70,000 in credit card debt or something like that. But yeah, I'd rather be debt free with bad credit. I because I've been debt free with bad credit, and then I've had lots of debt with good credit, and I don't know. I think that there's kind of like a freedom you experience when you just know that you can't even consider buying certain things, right? Like debt can make you feel the access to capital, access to credit can make you feel incredibly free because you can suddenly get all this stuff that you couldn't normally afford. You can walk into a Mercedes dealership and drive away with $100,000 car. That's a powerful, liberating feeling. But if you kind of know the difference between wants and needs and what's good for you versus what feels good, you might actually enjoy the fact that you can't buy that car. Like you can't even imagine yourself in the car because you know that's not even an option for you. Right? Like that's, and so in a way, I think it depends on what your relationship with money is and your relationship with debt is. Debt can be a wonderfully powerful thing for sure. I've seen debt pull people out of poverty, turn people into millionaires, billionaires, all that stuff. But then it's like debt also can make you feel like an alcoholic, or somebody that's like if you're a drug addict and somebody gives you $10 million dollars and you're just going to go use more drugs. So discipline is really the word that really fits into that situation. Like power must come with discipline. Like with LeVar Scott, the race car driver, he drives his car 250 miles an hour around this track. If he's not a disciplined driver, he's a very disciplined young man. He's very focused. He stays focused the whole time. Because if he wasn't disciplined, he would drive that car into a wall and hurt somebody, or including himself. So really, that's the way I would probably look at it. So I think that if I had perfect credit, I'd want to have perfect discipline to go with the perfect credit. That way, if you choose to embrace and engage debt, you're choosing the right kind of debt. You're doing your due diligence. You're not going to overspend. Just because you can have it don't mean you want it. So maybe ideally you want to be the kid that, the kid in the candy store, but you don't want to be the fat, undisciplined kid who can't stop eating candy, because if that's the case, then somebody needs to lock the door and lock you out of the candy store. And that's it's kind of like or if you think about alcoholics, it's better, it's silly if you have a drinking problem. It's silly for you to think that you can go become a bartender and that's not going to cause you a problem, right? Because you're around this liquor, the temptation is very, very high. So it's probably better if you just tell your friend, like, hey, look, if you see me in a bar, like take away my car, take $10,000 out of my bank account or whatever, like punish me because I don't want to go into that bar. I don't even want to be in the bar. I don't even want the temptation around me. And I would say that that's a good way to kind of deal with the temptation all of us deal with. All of us have some type of temptation, financially and otherwise, that we have to form some relationship with. All right. So anyway, let's move on. Let's move on. All right. So I want to share something else really quick. This is I decided to be a little Tyler Perry-ish, and I made another little short. I should call these. Everybody does these micro dramas now, so I think I'm becoming like the Black Tyler Perry or something. I don't. Did you get that? That's kind of fun, like the Black Tyler Perry. I'm playing. He's black. Anyway, so I decided to make another little short film, it's not really a film. It's like 60 seconds and it has a point to it. And it made and where did this come from? This came from the fact that I think about time a lot and I think about time travel a lot. And I just imagine, what happens when you make choices now, you're impacting your future self. And what would your future self say to you right now in terms of what he or she would ask you to do right now to prepare for the future? Like, or if you went back to 2010 and you could talk to yourself in 2010, what would you tell yourself in 2010? Or and then you move forward and you imagine, like, if you could talk to yourself in 2040, what would the 2040, 2035 version of you come back and tell you to do? And by meditating on that, I think you can come to insights into what decisions you want to make, like, especially with stuff that's predictable, like investing. So this is called choices. If it's not that good, let's just pretend like it is. I'm not asking you to say that it's good. I just want you to watch it and get the message. So here we go.
We'll start later. You never started.
I kept saying later, until later ran out. I had time. I just didn't use it.
You never invested. I kept waiting for money to save me. That was me.
I ran the numbers 1,000 times. If you had invested just a little every month, I wouldn't be sitting here.
This is...
So it makes you think about the E40 song, everybody's got choices, right? So the question to ask, and that's, yeah, that, thank you for watching. I appreciate that. Um, the question that I was asking there was, what choices are you making? And every choice you make is going to have a long-term effect, just like choices you made in the past impact where you are now. And it's like what does that look like for you, right? Like what would that feel like if you went to the future and talked to your future self? And what if you went to the future and you saw your future self suffering, you saw your family suffering? Or what if you went to your own funeral? That would be fun to explore. Like you went to your own funeral and they're doing a GoFundMe to raise money to bury you because everything's a mess and whatever falling apart. Like maybe that'll be a fun one to explore as well. If you start processing these things and meditating on that, then that might give you the inspiration or the discipline to act now and make those moves. Time is ticking. Time is ticking. And my extensive study of finance through all these years has led me to have a very deep relationship with time. Like it's so deep because it shows up mathematically. All the equations, it's like time, 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 time. And it's like, oh, I get it now. We're wasting time. We're not wasting money. We're wasting time. Wasting time is worse than wasting money. So time is not money. Time is more valuable than money. So the money is here. Time is here. You waste money. You can get money back if you know how to get it. Time, you can't get the time back. So because you'll never be 40 years old again. You'll never be 35. You'll never be 52 again. You get one shot at that, right? So every day is there's an urgency there, in terms of making your move, whatever that looks like for you, whatever that looks like, health, relationships, money, whatever it is, right? So make the move. Don't waste time. All right. So thank you for watching my films. Maybe I should like have a name for this. Maybe I should brand myself as a filmmaker now. I don't know. I'm kind of enjoying this. I like the drama, right? I like the little pregnant pauses and the reflection and the deep drama. Y'all want to watch it again? Would y'all like to watch? If y'all let's would you want to watch it again? Let's watch it one more time. Okay. All right. Since I've talked to you about it and we get the lesson, let's watch it one more time. All right. So here we go. This is called Choices, and and I assume you can hear the audio because nobody said they couldn't hear it before. So have you seen Choices? Would you like to watch it?
Let's look at it.
Remember wait, was that, did we come out?
That was
We
our
did.
wedding song.
That was our wedding song. Oh my God. Okay, wait, hold on. Before I play it, I forgot to mention my wife and I, when we got married, when we came out and they played the song literally was Choices by E40. It's a great song. And I was kind of mad. My friend from the Ghetto Boys, Willie D, was in the wedding, and Willie was like, "Man, if you told me that was your song, I would have got E40 to call you." And I was like, "So cool."
Does he got to come out and perform for a
He should. Oh, my birthday party.
party?
We should. I want Willie to do mind playing tricks on me.
Billy, we want this is gonna be huge, boys.
That's gonna be so much fun.
Would be
Okay, well, I'm in
beautiful.
class.
I'm sorry.
That's okay though. It's all right, but thank you, baby. All right, my wife, we're getting excited. We're having a moment here. All right, so here we go. That's so good. That will
Oh
be
my
cool.
God.
All right, so here we go. All right. So you want to see the final result? All right, here we go. All right, here we go.
We'll start later. You never started.
I kept saying later, until later ran out. I had time. I just didn't use it.
You never invested. I kept waiting for money to save me. That was me.
I ran the numbers 1,000 times. If you had invested just a little every month, I wouldn't be sitting here.
This is
He just downloaded an audiobook on this exact topic.
Really?
Yeah,
What's
that's
this?
very deep. I don't know. I hope it doesn't go over people's heads. That's deep. That's
Really?
heavy. I'll talk
Oh,
to you
they
about it
oh they
later.
got it.
That's heavy.
They got it. Do y'all hear my wife talking? She said she just. What's the name of the book?
I don't want to hear my book. Okay, it's about choices. It's called Being Supernatural, Becoming Supernatural
Oh, really?
by Dr. Joe Dispenza.
Dr.
Becoming Supernatural by Joe Dispenza. I just bought that yesterday.
Joe Dispenza. Okay. Okay.
Yeah, it's all about this video. I just bought it
Really?
last night, and I
Are you
never
kidding
even
me?
told you about it.
Wow, that's heavy. That's
It's
heavy.
deep.
Yeah, I want to hear more about it. So the
Wow.
book is called Being Supernatural by Joe Dispenza and
Becoming Supernatural.
Becoming Supernatural. Okay, okay.
About choices, the choices that you make, how it alters your life, your future.
Mm,
That's what the book is about.
wow. Okay,
Yeah.
that's heavy. That's really heavy. Okay, thank you for
Sorry
sharing
to
that.
interrupt.
No, that's okay. That's okay.
I hate on you. I got some stuff I want to tell you, but
Okay.
wait outside.
All right, I'll come outside in a
Okay.
second. All right. So yeah, and by the way, in case you want to know where we are, we're in Costa Rica now, and we're checking out this resort, this beautiful resort. For Alicia's doing a healing retreat next year, and this is what it looks like. And this is like the rooms are cool because some of the rooms have like the pool right outside the door, right? And so we get on the plane in Chicago and it's 16 degrees, and we get down here and it's literally 80 degrees outside. So it's pretty awesome. So if you want to join, I'm going to go to Dr. Alicia's retreat next year. So if you want to join her or just participate in her weekly Healing Haven book club, you can text the word love to the number 87948. So text love to 87948. And also, I have a book called Financial Lovemaking. You can have a free copy of that book if you go to boyceandalicia.com. That's boyceandalicia.com. So her thing is therapy, healing, trauma, relationships, which blends quite well with economic choices. My area is finance, business, money, etc. And what we find is that there's a big connection between mindset and money. And I think that this is one of the keys that can help us to unlock tremendous amounts of wealth in the next generation. Because when you get the mind right, the money tends to follow. And if the mind's not right, if you ever seen a mentally unhealthy person with a lot of money, then you see what kind of chaos that can cause. So the opposite happens when you have a mentally healthy person or a mentally healthy family that has access to money. You can go out and do amazing things. All right. So one more quick thing I want to mention in terms of whether or not I think there's going to be a market crash this year. Let me just say this. A lot of the experts are not predicting a crash this year. They're predicting the market to actually go up. And so a lot of this may be much ado about nothing, but it's really the preparation that does matter. And what is interesting is it's much cheaper to prepare for a market crash when the market's good. Umbrellas are much cheaper when you buy them in the sunshine than they are when you buy them in the rain. If you buy them in the rain, then they're going to be very expensive. So There's some little things you can do to kind of get ready for that. One other statistic that's out there is that large AI tech firms make up 33% of the S&P 500. So if there's any disruption in the growth of AI, that could cause a crash. And the stock market's been insane lately. It was up 15% in 2025. This is the third year in a row it's been up double digits. You can't keep winning every single year forever. At some point, it's got to be negative, right? It's got to go down. So just kind of be mindful of that. I did a training on this. It's called Stormproof Investing. So if you go to stormproofinvesting.com, you can get a copy of stormproofinvesting.com. So what I'm going to do is answer a couple of your questions you put in the Q&A section. And let's see, Corman says, shout out Chanel. We all need an assistant partner like her. Yeah, Chanel's awesome. Chanel's in the chat actually. So if you want to join Coin or join the mastermind or anything like that, she can take care of you. All right, so let's see. Akila says, how does the crash affect people that are into making money off of stock options? I just started the stock options course, so I'm curious. Actually, what happens when you sell stock options is that the market crash hurts you less than it does other people because what you're doing is you're paying yourself a dividend by basically selling the upside of your stock. So if you sell the upside and then there is no upside, meaning the stock declines or stays flat, then that means you make money even though people who are holding the stock are not going to make any money, right? So it doesn't mean that you're going to necessarily always come out on top, but it means you're going to come out in a better position than you would have been if you just owned the stock and waited for it to go up, right? So yeah, selling stock options is a great tool to have to prepare for market declines. It's a big tool to have. All right, next, Tyrone says, when will the 30-year investment simulator be ready to launch? That's a great question. I'm going to put that out today, I think. I think it's ready and test it. I got to test it one more time, but I'll put it in there. So what we did was for the Dr. Boyce deep dives that we want to do, we did one a week and a half ago. We're going to do another one in about 2 more weeks. Basically, I created something called a generational wealth simulator. And I said, what if we could live out the next 30 years and live it out repeatedly instead of having one shot and hoping that goes well? What if you could do it over and over again? So what I did was I created this generational wealth simulator that where we condensed a year into a day. So it's instead of it being 30 years, it's 30 days. 30 years is a magic number when it comes to generational wealth. If anybody who does consistent investing over a 30-year period is going to be wealthy, their family's going to be wealthy. So all it takes is for one generation to be willing to sacrifice a little bit, not sacrifice completely, not be miserable, but make a plan and stick with the plan. That is enough to feed the next 5 or 6 generations. All you got to do at that point is protect what you built, right? So it's like building a house. And then when you build the house, all you got to do at that point is maintain the house. It's like with the AI data centers. It's very, very hard to build a data center. It takes a lot of time, a lot of planning, a lot of electricity, a lot of equipment, a lot of materials. But once they build the data center, it's easy to maintain it. You cut your staff by 80%, 90%, and now you got this structure. So the same thing is true when it comes to building your wealth. Think of it like you're building a house, and once you build the house, everybody can live in it. They just got to make sure they don't burn it down and that they repair the dang thing every now and then. That's what it happens with the wealth. So basically, what the simulator does is it says, okay, if I make these investments, everybody gets $100,000 to start, and you're making these investments, you're picking these stocks, and then every day or every year, so to speak, you're going to have different economic variables that'll kick in that will impact the prices of your stocks. And so while you're watching your money go up and down and making adjustments to the portfolio, you're also learning how different measures and variables will affect the price of your stock. So you can try it out. And then it also is, it's fun to make it like a competition too. Like at the end, when it's done after 30 years, 30 days, actually, we can, have a leaderboard and see who did the best, that kind of thing. All right. So, and that'll be ready. I'll let you guys know when that's ready. Give me another day. Let's see, on your time machine clip, who was the guy that you said he was the one who listened? Oh, you're talking about the one from the other day. That was actually AI. These are not they look like real people, but they're not real people. And in the previous video, that was like an old version of Boyce, right? So they generated like this 75-year-old version of Boyce, like with a grayer beard and tired eyes, and it's kind of trippy to see that. Do long-term investment stocks require puts to protect them? It doesn't require it, but it helps. And so if you buy puts now, put options are basically insurance policies you get on your stock. It gives you the right to sell at a certain price if the price goes below that point. And so put options are something worth learning about and looking into to protect yourself as it pertains to um, the possibility that your stock could crash or the market could crash. Okay, all right. So let's go ahead and finish up for today. I'm gonna go ahead and head on out. I'll be back in an hour actually for a stock market class. So if you want to join us there, just go to drboystockmarket.com and bring your stock questions, and I'll be looking up stocks and letting you know what I think about them and showing you, stuff that I think is worth looking into buying and all that good stuff. And also, Chanel, thank you for coming in. She's got the link if you want to join the coin cohort for January 8th. That starts January 8th, where you can learn all about stock options from A to Z. And I'll see you all tomorrow. And so God bless you. Have a good day, everybody. Take care. Bye bye.